Hello, everyone. I am Devin Southall. We are going to talk about landed cost in Acumatica, Dynamics 365 BC, and Dynamics GP today. So, Adam, if you will advance our slide. I'm Devin Southall. I am going to do the GP presentation. I am a consultant with 19 years experience in primarily GP, though I was Acumatica certified at one point. It's just I have so much GP work. Here I am. I have a background in accounting and small business, and I specialize in our distribution and manufacturing clients. All right, if you want to advance, I'm going to introduce the rest of the people presenting today. Next, we have Beth Grant. She is our Acumatica consultant. She's been with us for 3 years now, but she's got lots of years of accounting and experience in manufacturing, and she focuses on Acumatica. And then lastly, but not least, we have Adam Martin, who is our practice manager for our ERPs. He's been with us for over 10 years, and he dabbles in all three of them. So Microsoft Dynamics GP, Microsoft Dynamics 365 BC, or the mid-market product, and Acumatica. He's going to be presenting to us in BC today. All right, so next slide. So this is our slide where we talk about our three solutions, but you've already heard that. So our core that we've been doing for a long time is GP, a legacy on-premise accounting software, but we also do two cloud software, Microsoft Dynamics BC and Acumatica. And I believe we are going to get started, correct? Oh, no, we're talking about landed costs. Sorry, everyone. All right, so what is landed cost? Why do we care? So landed cost is a module that allows us to add more than just product cost into the cost. So we can add transportation fees, we can add customs, duties, taxes, and tariffs, and insurance. So it's becoming a bigger thing now, obviously, with the tariffs. That's why we thought it would be good to talk about it. If tariffs come down, this is one of the ways to add that into your costs. And that works it by a couple ways. Next slide, please, Adam. Which is the goals for landed costs in ERP is a couple things. So obviously our main goal is to add the additional costs into the item inventory value, but there are some secondary goals. We may want to do a two-way match to match that invoice against the accrued costs so you can have that audit trail. And we may want to roll back cost variances into inventory. And so we'll touch on those capabilities as we talk through the other pieces of software and what each of the ERPs can do with landed costs. What's interesting is the perspectives on how they go about it. The timing is different and what it allows you to do is different. And so depending on which ERP you're on, or if you're on GP and you're thinking about possibly moving to those other ERPs, that's super useful. Okay, so those are our main goals for landed costs, and that's why someone might use the landed cost module. All right, now I think our next slide is going into the ERPs. All right, so first up is Acumatica, which is Beth. So I'm going to turn it over to Beth.
Hello. So I'm going to cover the Acumatica's built-in landed cost feature. It has a very simple setup, and it enables those costs to be added onto the cost of stock items. It also allows you, if you use standard costs, to throw those costs as a standard cost variance expense. There's 3 steps to setting up landed cost codes. You set up a reason code, you set up a few required general ledger accounts for the landed cost accrual and landed cost variance, and then you make the vendor a landed cost vendor. Once you have those 3 steps set up, you can set up your landed cost code. Once your codes are set up, then you can start with your landed cost receipts. So you would set a code up, like Devin was saying, for your taxes and tariffs, duties, broker fees, freight, ocean freight, along those lines. So then once you have your code set up, you can enter your receipts in and then the bill associated with those landed cost receipts. There's several ways to do it. And then when you're all done, you can review the postings to the inventory and GL and see how it's impacted your inventory valuation and the general ledger postings. Okay, Adam, I'm ready for the next slide. So here's the first two steps in setting up a landed cost. First, you would set up your reason codes. Reason codes are across many aspects of Acumatica. You use them in receivables, you use them in inventory. They're a shared type of feature, but the reason code assigns the usage to it, where that usage box is, where it's adjustment, that's the usage code you need for a landed cost. And then you can combine the sub-account from here. I'm combining it from the inventory item, that's the III, but you could use just the reason code sub-account and put ours there. So it gives you different options on how you want things to post. Then the default account for this reason code is freight in raw, and the sub-account is assigned. Next, we would set up the required general ledger accounting. All you need is an accrued landed costs account. This is like your goods received not invoiced account. So it's on your balance sheet. It ties to a report at month end. It would be like your goods received not invoiced account report, but you would run it for your landed cost account. If you notice on the goods received not invoiced report in Acumatica, you can run it by account. So here you would now start running it for your regular GRNI account, and then run a second report for your accrued landed costs. And then it requires a landed cost variance account. So that's all you need for the accounting. Then I need the next slide, Adam. And then the third step is very simple, to set up the vendor as a landed cost vendor. You would just come into the vendor card and check landed cost vendor. And that's all you need to do and save. So I'm ready for the next slide. Then you would create your landed cost codes. So here's where you would create a different code for each different type of fee you want to, or cost you want to capture. So this example, I've set up a brokerage fee. So you make the code, you add the description, the type. There's a pull down menu there. So there's miscellaneous origin charges like here. There's there's duties, there's taxes, there's VAT, your value added tax if you bring in goods from Canada. The type isn't tied to anything, is more of a reporting feature. So that's not a required field. As you see, there's not an asterisk. If you're from Acumatica, an asterisk on the side delineates that it's a mandatory field, but it is a good field to populate so you can track by your different types of costs. The allocation method is probably the key piece of how you want to put your landed costs in. So you can allocate by quantity. This is good if you have purchase orders that are all very similar or have one line. So you want to do by quantity if most of your goods are the same price, like, and say you're buying yarn and you're just buying different colors, then quantity would be fine. If you're buying different types of items on a purchase order, like say you buy an expensive supply from this vendor and then you buy some very inexpensive tape or something to go with, crates maybe even, so the crate costs $20 and the tape costs, $3 a unit. There you'd want to do it by cost, so you'd allocate your landed costs out by the cost of the goods, because it makes more sense that way. And then if it's a freight item and you want to do it, you have heavy goods coming or various goods coming in your container by weight, you use weight. If you have products that's dim weighted where there's volume involved, like a weather stripping is very fluffy and so those boxes get dim weighted, you could do it by the box sizes, which are available in Acumatica. Or there's none. And none just takes that cost and it skips the landed cost accrual piece. None just takes a cost and puts it to the expense account that you've assigned. It doesn't go on to inventory. So that's what that method does. So you assign oops, if you could go back one, Adam, I'm sorry. You assign that allocation method. The vendor is optional. You can tie it to a vendor, or you can have an open type of code where you could use it on multiple vendors. The location comes from the vendor, or you just put main for your location. And so do the terms. The terms populate if you populate a vendor. And then you assign that reason code that you created. So here I've assigned the landed cost broker fee to my landed cost code for broker fee. So it's all linked in together behind the scenes in Acumatica. And then I just assign my GL accounts. So then this landed cost is set up. So now I'm ready for the next slide. So here's my landed cost codes. So you can see, you can pick different items and see the type column in the third to the right. You see one's for customs duties, and then the two other ones are for freight or miscellaneous origin charges. But you can break them out. So I've broken, broker fees out from the drayage when you're bringing a container from port to your factory, and ocean freight. So you can delineate out the different types. So if you want to have reporting on the landed costs that your company's getting hit with, you have those buckets to report on. I'm ready for the next slide. So then once you have your codes all set up, you can go ahead and add your landed costs, and you add those costs through the purchasing module just like you would do a purchase receipt. So you come into purchasing under transactions, and you will go under landed costs, and then you would just fill in the landed cost card, put your vendor in. So it has to be a landed cost vendor that has the check mark on it. Pull in your vendor. On the first tab, you enter the landed cost codes. So they are to the right. And so like here is a duty and the dollar amount. And then you have to populate the second tab for details. And you need to add the PO receipt as a whole or a PO receipt line. And so you pick your receipt, and you can have more than one receipt that goes with, like, so EMO is a big freight brokerage for international freight. So you could have multiple POs on one EMO bill. So you can pull in different bills onto this EMO Trans landed cost invoice. So you can allocate it across everything that came in on it, all in one entry, and then it'll disperse it out into the system. So once you have the details tab populated and the landed cost tab populated, you can remove the hold and release the transaction, and it creates the landed cost accrual. So this would have it sitting on your inventory item if the goods are still in your facility, or if they've shipped already after you got the bill. And the goods are already out the door, it puts it to cost of goods sold. It knows those goods are no longer on the shelf that they've shipped, so it matches it down to the COGS line with where the cost of the product went. And then it puts the credit of the, I'm the accountant, the credit side of this transaction goes to your accrued landed costs. Then you can go to the next slide, please. So then you have it sitting in accrued landed costs. It's in inventory, and the last step is to process your AP bill. So you need to pay your landed cost vendor. You can add the bill right from the landed cost screen. If you notice, there's actually two ways to do this. You can, even before you release the bill, down under the vendor, under the currency line, there's create bill, and then there's a vendor reference. You can check that box and put the vendor's invoice number in there, and the bill will just get processed right while you process the landed costs. It'll just debit and credit the landed cost account and move the bill to accounts payable. So that's one option. The second option is what we're showing here, is once you've released the hold and released the cost, the landed cost, this enter AP bill will be at the top, the green box. So you click on that, and then it takes you into the normal Acumatica bills and adjustment screen. And you would just like we do a PO line, to the right there is that add LC. So there's an add landed cost feature. So you click on that and it'll pop up the box and it'll show the landed costs that are available for that vendor. So you match up which landed costs you want to have for that invoice that you have in your hand. So there's the two methods to enter the AP bill. So then once that's all transacted, then it sits in payables like a normal bill, and you're basically done on the landed cost side of the house. If you want to show the next screen, this next slide. Then if you review what has happened, the landed cost is added to the stock item cost. So on the left is the journal entry. So you can see it debited raw material inventory account for this company and credited accounts payable, or accounts payable landed costs when you put the landed cost transaction in. So it increased the value of your inventory and increased a payable in landed cost accrual because you don't have the bill here in this example yet. And then it increased the cost on the stock item on the right-hand side. So you see the $500 on the inventory valuation report, and it'll add to the landed cost for your stock items for actual cost items, FIFO, and average. If you have standard costing, it's going to put it to the standard cost variance account on the income statement for you, so that when you don't, and then that's something you would review when you start analyzing to update your standard costs for the next year. You could, if you do it annually, you could see what the impact is of your landed costs by checking that. So that's how it gets onto the goods. It captures it all, it tracks it all. Anything in Acumatica, if it has a line, and like we saw the type, it can be reported on. And we've been setting it up on most of our new customers that have inventory. So, and it works very well for them. And that's what I have on landed cost for you today.
All right, thanks, Beth. Thanks for going through Acumatica. What we're going to look at next now is what landed cost looks like in Business Central. So to start off, just to go over what we'll be looking at as far as BC, we're going to kind of take the same approach that Beth did, looking at what's the required setups, what does landed cost look like in the various transactions that we can do. So we'll look at it on a purchase order, which is where we receive in Business Central. Typically, the receipt would be done off that PO into the same vendor. We'll look at landed cost after those goods have been received. What would that look like? That's where you make it an invoice from a different vendor, associate those costs to the inventory. And then the last one we're going to look at is what it looks like to do it on an item transfer. So each of these areas, we have the ability to add costs to our items and capture those in our inventory. Okay, so what does the setup look like in landed costs? So probably the least amount of setup that's required in any of the three ERPs that you're going to see. You're going to see what's going to be different about BC is that it gives you the options when you're recording the landed cost transaction. That's where the most of the setup is. So not a lot of preferences are set here. Most of it's in the hands of the users when they're applying the landed cost. So really the only setup that's required is to create item charges in BC. So a little bit of a different name probably than what you're used to, as we're calling this landed cost. They call it item charges in BC. So what you'll see here is that I have a couple different options, but basically any of the various scenarios that you want to have set up to capture costs into your inventory, you're going to add those as item charges in BC. So two examples I have there are freight and tariff. Of course, you can add as many as you want. And then all that's required is a name or a number and then a description. The second part of this is the kind of how the GL accounting works behind the scenes, which is the general product posting groups. So beside Business Central, we never really give named accounts to any sort of item or card, if you will. It always comes from a posting group or a posting class. And so that's where the GL account assignment happens for our item charges. And really what's happening is that even though we're assigning a posting group here, a lot of the accounting that's happening, the GL accounts that are hit, are going to whatever the item that you were assigning is. So you'll see that in a minute when I go through some of these slides of what that looks like. But basically, we will be seeing, if we looked at a preview posting or an actual posting journal, we would see a lot of ins and outs, counts that are washing each other, which is how BC is going to handle the posting of these landed costs. Okay, lastly, just to describe where you could use this, Business Central supports it on all their valuation methods, whether that's FIFO, LIFO, specific, average, and standard. The only difference is that if it's standard cost, just like Acumatica, we're posting it to a variance account, in this case, the purchase price variance account of the item. If it's FIFO, LIFO, specific, or average, we're adding it to the cost of inventory. Okay, so diving into what it actually looks like on a transaction. So as I mentioned in BC, we receive generally right off of the purchase order. So if we're looking at a purchase order, in the system, I have one created here with a couple items and then a charge for a tariff, which ends up being about 10% of this total PO. So how we do that is add the cost as a charge item on the line items of the PO. So you can see it's the third item that's boxed in red. I give it an amount, so whatever that tariff is or whatever that fee is that you want to capture, we enter that amount. And then the next thing we do is assign that charge then to the applicable items on our PO. All right, so we'll see that on the next screen here. So when I do my assignment of that landed cost to those items, I get a couple options. One option is this suggest item charge assignment. So what you'll see is a pop-up that if you choose this, you can select how to distribute the assigned charges to the items. You can see we can do it equally, by amount, by weight, by volume. Beth already described those various options and why you might choose to use those, so I won't go into detail on those. But you can see how the system can automatically suggest how to assign to those items. So in this case, I did it by amount, so it's doing it by proportion by the value of those items. And in that quantity to assign box, you can kind of see it's giving like a percentage or an amount, if you will, in another column. So there's a couple different ways you can do it. You can have the system suggest. I can type it in manually. So if I only wanted to associate that tariff with the first line, I can assign it in full to the first line and 0 to the second. So we have a lot of flexibility here. You can do it in a percentage. You can do it in an amount. The bottom right screenshot there shows my amount that I'm assigning of that tariff at $96. You can see $88.62 to the first line, $7.38 to the second. So during the receiving, so when I'm posting this receipt then, and this gets back to like the three-way match. So if I'm doing the PO, I'm doing the receiving transaction, then later I'm getting the invoice from the vendor. This method here is posting the receipt and this landed cost to the PO vendor, right? So this is a tariff that I would be receiving from the vendor or a delivery charge from the vendor. If I need to associate cost from a different vendor, I'm going to do that in a different screen, and I'll show you that in the next slides. So during the posting of this receipt, though, the charges are going to be applied and added to the cost of inventory of these items that I specify. The offset is going to go to an inventory accrual account, interim account that's specified on the item. So it's going to use basically the same purchased, received, not invoiced account as the item, is essentially what that's saying. Okay, what if we get a freight charge or a landed cost from a different vendor? We want to associate that to a purchase receipt or a PO. What we would do in this case is add the item charge as a line item on our invoice. So we would put the purchase invoice in and add the charge item to the lines of that purchase invoice. And if we hit get receipt lines, when we do the item charge assignment, we can go find the receipt to apply that to. So what that means is that I can assign that charge item to any purchase receipt in the system, and it could be multiple purchase receipts. So if this freight charge actually represented multiple PO receipts, we can absolutely do that. So we can suggest the item charge assignment amongst those lines the same way, or we can do it manually. All right, and then the last of our transaction types is the item transfer. So if we want to associate the item charge to an inventory transfer, we can do that as well. Basically the same thing that you saw before as if I have the invoice straight from the vendor that I want to associate to a receipt. Same idea here. We're adding the charge item to the line of the purchase invoice, and rather than get receipt lines in our action menu for the assignment, we're going to choose get transfer receipt lines, and so we can associate it with inventory transfer. So if you're moving things between 3PLs or warehouses, maybe it's even your own truck and you want to associate cost, you can absolutely do that in BC. Okay, and then my last slide here is reconciling, and that's going to be your basically received not invoiced. You want to know at the end of the day that your received not invoiced GL account matches what you've received but not yet invoiced in the purchasing module. So as I mentioned before, the accrual gets hit to the same as the item, so it's going to be the same purchase accrual account that's used. The received not invoiced report, of course, is called something different in BC. We call it the reconcile accounts payable to general ledger report. The first page of that report lists all the items that you've received in but not yet given an invoice for. The big thing here is that this is not run using an as of date. So this is run as of the moment you run this report. So I can't go back and say, well, what was my balance as of 3/31? No, this is going to be as of the day you run the report. So important that you run this once your receiving is all done for the month and before you start receiving the next month, so you can have an accurate report that you can reference back to. So obviously you would save that report off somewhere, print a hard copy so that you would maintain those for your records and know that you're in balance between your received not invoiced and what the report shows. And as you can see on this report, item charges do show on this report as well, in addition to your items. And just like any BC report, you can filter just your items, just your charges. So if you wanted to see those two things separate in your report, you absolutely can. Okay, I'm going to turn it over to Devin. She's going to bring it home by showing us landed costs now in Dynamics GP. Go ahead, Devin.
Thanks, Adam. All right, so let's talk about GP now that we've seen the other two. All right, so, oops, sorry, title's wrong. Should say BC here. We're going to talk about setting up landed cost details in groups. We're going to talk about options for applying them in GP. We've got a few more options. We're going to talk about the invoice match and landed costs assigned to an in-transit transfer like Adam just talked about. Next slide, please. So costing methods in GP, we can do any of the perpetual or the actual costs. We can do average. It does not work on standard cost. I've tried it. It actually lets you post it and then completely messes up the cost. So it's definitely not supported for standard cost. In GP, you would just include that in the standard cost, but you wouldn't be able to do the invoice matching for that. All right, next slide, please. So the landed cost detail is shown on here. As you notice, we have some of the same cost calculation methods as you've noticed in the other ERPs. There are a little nuances to these, particularly for flat amount as we get to where you can apply them, which we'll touch on. Vendor ID is you attach to your landed cost ID and what currency it is, the calculation method. If you're doing a percent, obviously you'd put that in. Invoice matching is optional in GP, so you don't necessarily have to invoice match it, at which point you would not have an accrual account. What's listed as your accrual account would be the expense account that you want this to go to, because you would not invoice match it. And you have an option of whether you want it to revalue inventory or not if the accrued price is different than the actual invoice price. And our accounts here, as you can see, the PPV are per. Thank you, Adam. Oh, no, we're good. Go on. So the next piece is a landed cost group, also listed under inventory cards. And so two of the application methods require you to have a group. So a group can be one or more landed cost details. And that'll make more sense as we go to the next slide. So just understand how that works. And I don't love these naming conventions, but they're what Fabricam has. All right, moving on. So you have three different options on how to apply your landed costs. So we'll go through this. This first option is you're going to assign a landed cost group, which is one or more details, to the item setup. What this will allow you to do is pull it onto the next step. So basically, if this is done, you won't have to pay attention to it. It'll always get pulled onto all of your transactions. Okay. So the next option, if you move ahead, Adam, is you could put it on the PO line. So if, let's say, the vendor is different, so you can't put it on the item, but for each PO, you know what group you want to be used. You could set up a group for particular vendors, and on each of the PO lines, you can add this group. Now, remember how I said back on the setup, you want to worry about flat fee. Flat fee in groups in these two methods, when you're going to have a multiple line PO, gets messy because it's going to add those flat fees for every line. That's where when you're going to do the PO or the PO line, or sorry, the item site or the PO line, I like to stick with the percentages unless it's a dollar amount per unit, $10 for each unit kind of thing. So that's our so really putting it on the item site makes it pull into the PO for you. If that doesn't work, you can put it on the PO for yourself, and then it pulls to the receipt, which is the third way we can do it. Adam? So you also can put it on the receipt line exactly the same way we talked about it. And again, if you put it on the item site, it would put it on the PO. If you put it on the PO, it would pull it on the item line for you. That's that blue arrow by item number. But there is another option on receiving, which is the button down at the bottom. So that landed cost button we have highlighted allows you to apply really during the receiving on the fly landed cost details. Here we don't need the groups. Here we can just go straight to the details. So it really depends on when you know in GP versus if you noticed in the other ERPs, it's really more equivalent to this landed cost button. You apply your costs right here during the receiving, or the other ERPs you can do after. We can't do that in GP. It has to be on that receiving when you post it, or the ship has sailed, you can't do it. All right, next slide, please, Adam. So the invoice matching, so you can invoice match it on the same invoice as the goods or a completely different invoice as the goods. So it could be the same vendor or different vendors. What you do is on that purchase invoice entry, we're not going to use our auto receive buttons up at the top. What we do is you check that landed cost button that I have highlighted in yellow. You put in, now when you check that box, your item lookup becomes your landed cost details. So you select your cost detail, which is my air freight US, and then you hit your little blue arrow to go to the match to shipment and select the receipts that have been accrued and that are ready. The accrual that everyone else talked about, they showed you your report. Standard GP report, it's right there on the report. Landed cost is just listed on your receive not invoiced standard report. All right, next slide, please. You also can do it in transit transfers. So it's, again, per line. You can add that group. And if you have it on the item site assignment, this will get auto pulled in. So something to be aware of if you're doing in-transit transfers. I've seen that happen by accident. All right. It's much easier when everyone goes through the details. I can blow through it. All right, Adam, next slide. Oh, so this is where we should probably have a question slide, but just for my GP people, remember GP important dates. All right, questions for anyone? No, it's fine, Adam. Beth and Adam, do you have any questions? Any things you want to add in that you noticed while we were talking?
No, I don't think so. As you can see, we can do landed costs in all three of the solutions. Each one has different nuances to the setups and how they're used. But no, I think that was a good comprehensive, quick look, or 1,000 feet look at what that looks like in each of our products.
Right, and if you're interested in deploying it in your ERP, we didn't get into the nitty-gritty details, so contact us and we'll help you. Any more slides, Adam, or I think we're done.
That's it.
Beautiful. Thanks, everybody.
Thank
for watching.
you.